Hello everyone, my name is Mark Newman. As we get close to 30th of June, I get a lot of questions from people about asking should they go out and buy equipment or assets for the business prior to 30th of June to claim it as a tax deduction. So in this video, I want to go through some of the basics on how it works and what we need to consider. Now always seek independent advice prior to doing this because everyone's business and circumstances are different, so therefore we want to make sure what we do is right for your business. Now firstly, this is a tax deduction for small businesses, not individuals. So if you're an individual, even working in a business, any asset that you purchase over $300, you're going to have to depreciate regardless. So how does this actually work for businesses? Well, one thing we need to remember is it's only a tax deduction, so it's not a tax refund. So for example, if we went out and bought a $1,000 item for work, piece of equipment, what that does is reduces our taxable income. So if we're at the top tax rate of 45%, what that means is we actually reduce or have a tax saving of $450. The other $550 effectively comes out of our own back pocket. So when we buy an asset, make sure the business needs it, not we're doing it for tax deduction. If we're at a lower tax rate, for example 19%, we're only going to get a refund of $190, i.e. it's going to cost us $800. So it's important firstly that we understand what our taxable income is likely to be to understand the taxation effect prior to doing this. Now, what are the amounts that we can claim? It applies to assets that firstly are under $150,000. And secondly, it applies to assets that we purchase up to 30th of June 22. So it doesn't have to be bought in this year, which is 21. We can actually claim it in the 2022 year. A couple of things that we need to consider. Firstly, if we're buying new assets, our turnover needs to be less than $5 billion. Obviously, for anyone listening to this video, I'm assuming we're in this case. But what about second-hand assets? Can we go out and buy, for example, a second-hand vehicle and claim it? Well, yes, we can. The only slight difference is that our turnover for second-hand assets needs to be less than $50 million for the business. Also, if we're buying second-hand assets, make sure we get a receipt. Just handing over cash to someone is not good. They're still going to have to fill out some sort of document proving that we purchased it. Another question is for motor vehicles. Does a $150,000 limit apply to motor vehicles? Well, the answer is no. Motor vehicles are subject to the depreciation cost limit, which at the time of doing this video is $59,136. So if it's a conventional vehicle that we're buying, our maximum depreciation we can claim will be this amount. And if we're buying trade vehicles and certain other vehicles, what we need to do is firstly look at the eligibility requirement, but if it's a trade vehicle, we may well be able to go above that amount. Another thing is if we're buying a conventional vehicle, always do a logbook to substantiate how much we can claim. The ATO loves looking at conventional vehicles, and one of the first questions they ask is, do you have a logbook? And if the answer is no, it's going to reduce the amount you can claim as a tax deduction down significantly. Another thing we need to consider is it needs to be installed and ready for use. Once it's installed and ready for use, we can claim it effectively as of that date. So for example, if we're going out to buy a motor vehicle, what we're going to have to make sure is that we can actually register it in our name or the business's name prior to 30th of June to claim it in that year. So for example, if we can't get it prior to 30th of June and it's going to be registered in July or August, we'll be claiming as a tax deduction in the next year once we're able to use it. Now that may not be an issue if we actually need the vehicle and we're not too worried about it. And the final question is, let's say I go out and buy something, but I don't want to claim it all as a tax deduction this year. For example, I expect my income to increase next year, or alternatively, it's going to reduce my income too low. Yes, we can actually defer the claiming as a tax deduction and what we call depreciate it normally over a number of years, but we have to make an election to the ATO to do this. So remember, prior to going out before 30th of June and spending money on assets, what we need to do is consider the impact on the business cash flow, also the taxation impact, and make sure that we actually get the benefit that we believe we're going to. If you have any questions about buying assets prior to 30th of June, please do not hesitate to contact me. Thanks for listening, Mark Newman.